welcome back to the channel. I want to talk about another trade I took on EU yesterday on Tuesday 25th of April 2023. I'll show you the before. This was the trade I took. So without further ado, let's jump straight into it. Of course, starting with the DXY. So my narrative for the DXY is I'm actually anticipating these relatively equal lows to get swept. That's my kind of higher time frame narrative for the DXY into this big monthly fair value gap that we have here. So obviously if I'm bearish on the DXY, then I'd have to be bullish on the EU. So my narrative for EU is for price to trade into this monthly fair value gap and also sweep the liquidity above this previous month's high, which is actually bang on equal with, I believe it's a previous week's high on EU. So this high comes in at 10.757, 10.754. So it's literally like 3 pips off. So relatively equal enough anyway. And as you can see, this is a previous week's high as well. So that's my narrative. However, this trade was a short, so I was counter trading my weekly and monthly bias, which I don't mind doing. I will trade counter my weekly and monthly bias / expansion. The only thing I won't do is counter trade my daily expansion. If I'm anticipating the next daily candle to trade bullish, then I will not be looking for shorts. So going into the daily, let's go on the DXY. We'll move this. Okay, premium discount of this range. There we go. We'll move this as well. I don't like clutter. So Tuesday, Monday's candle, the opening of the week, traded into this daily order block. Okay, and then Tuesday has expanded away from it. So if we go down to the 4 hourly as well, these candles here, these would make up an order block. However, for the 4 hour, I actually had my eyes on this large fair value gap, which price dipped into nearly, I believe, is that consequent encroachment? I think it was just a bit off consequent encroachment, sorry. But close enough. However, we've traded into it, and then we've started displacing away. Obviously, inversely correlated with EU. We had this rejection block here, which Monday traded into, Tuesday displaced away. However, on the 4 hour, I had my eyes to these two up close candles here before bearish displacement. That is a bearish order block. Prices traded into it on Monday, and then we've started displacing to the downside. Now this is like a little tip as well, and it's something that's so obvious which people don't really I think apply to their trading or even know about, but it's something that literally is in front of you every single day. And that is, like, look at the candles. You can see we've displaced away. And when you get that displacement away, you can see how on the 4 hour, when we're displacing away to the downside, the 4 hour candles highs get respected. They're not being traded through. It's an open high low close delivery. It's essentially a sell program, and when you're in these buy and sell programs, when you see this phenomenon happening, like again here, we're trading bullish, we're in a buy program. So you can see that the candle's lows are going to be respected, and obviously it trades into the fair value gap of the previous candle. Now you can sometimes get it where a previous, a candle will sweep its previous candle's low into the fair value gap, which would essentially be the IOFED, Institutional Order Flow Entry Drill. That's okay. That's still, telltale signs of a buy or sell program. But like the way you want to look at it is, if you want to try and anticipate where the next 4 hour candle is going, it's like with the daily expansion. I mean, if I was to close it here, cut it off here, if you've seen this displacement, you know, okay, it's offsetting a sell program now. So if you was here as well, when was this, 10 o'clock till 2 o'clock, you know, you'd anticipate the next candle to trade bearish, right? Which it did. If you can anticipate where the daily candle is going or where the 4-hourly candle is going, it makes the lower time frame stuff so much easier. All you have to do is find a simple retracement entry, you know, OTE or to some kind of array, and then that's it, and then you just get in line. The higher time frame always trumps, remember. So obviously we've had this displacement way back onto the DXY 15-minute time frame. Let me remove these lines again. I don't do clutter. So this is actually, I had this for a market maker buy model. You know, we've got all this initial consolidation, and then we've got the drives down. So we've got like one here, and there's, you know, a couple there. We've got, you know, one here as well. And then we have the smart money reversal or the market structure shift, but however, it would be a smart money reversal in this context because it's a market maker model. We've prices traded higher on Tuesday, and then we've then traded into this array here. This would be a mitigate. No, this would be a breaker block. We've also got this. This is a order block, and then we've also got, you know, this fair value gap here. So you can see that bullish price raise on the DXY being respected, which is telltale signs that the algorithm is seeking buy side liquidity. And it was this fair value gap that I looked to frame my trade on. Obviously in New York, I always, if you trade in New York, you want to hunt for that retracement at around 130. You always get a retracement at around 130, give or take 30 minutes either side of that time. But in this case, it was, look, bang on 130. That was the peak of the retracement, and we've retraced into this fair value gap, coupled with, you know, there would be some kind of array here, mitigation block. I mean, I had the fair value gap outlined. So this was essentially my trade on the DXY. Even somewhere here. Obviously I took the trade in the EU, I never trade the DXY. So going on to the 15-minute, everything's inversely correlated. Again, market maker sell model, that's initial consolidation, and then you've got these drives up here, okay, and then another one, and then boom, you've got the SMR occurred within a logical area, being this 4-hour order block that I was talking about earlier. We've then displaced away in London, and then we've had this retracement here. You could have probably traded that. Okay, that would have been a valid trade up into that fair value gap. That would have been this trade here into this fair value gap. That could have been something you could have looked to frame a trade on. However, with this, I took the silver bullet, which is the second retracement. There's a saying goes that the silver bullet never misses. I mean, it does miss because there's no entry model that's 100% in trading, but it's a lot more reliable. So we can see here we had a bearish breaker block. This here, 15-minute bearish breaker. This up close candle for bearish displacement as well. That's an order block. And we've also, if I draw a premium discount from here to here, it resided just in premium, didn't quite come to OTE. So it's a New York continuation. I won't call it a London to MI OTE because it didn't actually come to OTE, but it did come to premium and this breaker block, which was where I had my entry here on the open of this breaker, and stop just above the high here. So for my targets, we had these equal lows. That was a good liquidity target, along with, you know, this fair value gap here. However, I did target the this here. I targeted this 4-hour order block, which actually got traded straight through. This resided just at equilibrium, and that was my trade here. Okay, we also had on the economic calendar for yesterday, we had the CB consumer confidence, I believe it was. Where is it? If I just get it up. Shoot. Yeah, we had CB consumer confidence at 3 o'clock. However, I was actually out of this trade by just before 3 o'clock, and then obviously CB consumer confidence has seen it trade lower. But at the end of the day, I always target the next opposing array. I don't like to be greedy. This did actually then go on to take the previous day's low. That was a previous day's low on EU. But yeah, it's a very fruitful trade. 1.93R secured. And that was about it. So I hope you enjoyed this trade breakdown. Please leave a like, comment and subscribe. And I will see you in the next one.